So welcome everybody. I would like to welcome back Allan from Cavetta. I always say this wrong, don't I? Cavetta Consulting?
Cavetta, yeah.
Cavetta Consulting. So it's great to have you back, Allan. Now, the title of this vodcast is going to be No Question is a Daft Question. And I guarantee the subject that you're going to talk about, people will have lots of questions because they won't know much about it. But as with anything, you do feel a bit foolish asking questions sometimes, and that's probably my biggest fault. It's probably like to ask questions because you feel like you look a bit stupid. But with something as important to this, and something that can save your money, your business money, it's really important that you ask all the questions that you need to. So I'm going to hand over to you. Do you want to do a little bit of an intro first, and then I've got kind of a list of questions that I want to go through with you, if that's okay?
Okay, so firstly, I would say you've raised a very important point, Sam. The reason people are afraid to ask questions, what does stop them engaging with this, because you're very truly don't want to look daft. But we think about a capital allowances specialist, and I've been in tax for over 24 years now, allowances surveyor for 18, and I actually count door closers for a living. That is basically what my function is to do, so to give it its value. So there's no daft question you can ask me, and we don't bite. So yeah, if there's anything after this, please feel free to get in touch. So as I said, I've been a chartered surveyor now for close on 18 years now. As a small company, we managed to find about £130 million of items in property which are not in an invoice. Never been challenged with HMRC, and we've saved our clients over £23 million in tax. So wow. we are well qualified to answer your questions and address any concerns you might have. Right. So I'm going to hold off going too much into myself and just put the feet to the fire and let's go.
Yeah, okay. So one of the first things that I'd like to ask is, I know people are always very wary of being kind of scammed almost, and it sounds too good to be true. So I think I'm going to align this to something that probably everyone will understand. So PPI was a huge thing, for want of a better word, that happened. It exploded and now it seems to have disappeared. So is what you do, is that like a PPI scheme?
No, claiming capital allowances is nothing like this at all. Capital allowances, believe it or not, claiming this tax deduction has actually been around since 1878.
Wow.
In some shape or form. It's something the revenue want you to claim. It's got its own piece of legislation, which was done. Its current form was in 2001. So it's on. So MPs have debated this and actually put it in the statute books. The Inland Revenue have a big section on their manuals. So if you look up capital allowances manuals, you'll see pages and pages and pages of it. In terms of tax legislation, there's been more cases homing in and defining elements of capital allowances than any other tax matter. So it's a real thing. The revenue want to claim it because it puts stimulus in the economy. So no, it's not a PPI scheme, and anybody who does this sort of work will either be a chartered accountant or a chartered valuer, as myself. So it is a very, very highly regulated industry. Okay,
perfect. If I claim, so I want to do a claim, do I just automatically get a check or a refund back from HMRC? How does it work that I get the money back?
No, claiming capital allowances will not generate a repayment from HMRC. Why is that? Well, if you're diligent and you claim capital allowances in the year you're preparing your tax return, then the tax deduction kicks into force. So in fact, you're going to be paying less tax in the first place. So that's the benefit. Your alternative is, if you wanted to claim it later, would be to pay the tax, then resubmit the tax return in order to generate a refund. So if you're quick off the mark, then you don't have to pay the tax in the first place. Okay. There are some instances where people have not realised they could claim. So maybe they fitted out a shop last year, and they didn't realise they could claim allowances. They put their tax return in. They met someone like me who said, no, you could be claiming this tax return. In that case, we would put the deduction in for the prior year and they would get a refund. But not in every case. It depends how quickly and on the ball you are.
Okay. So We obviously at directorschoice.com, we've got a panel of accountants, and I know that they do seem to do everything accountants. What if I came to someone like yourself and didn't go directly to my accountant, would then that have a detrimental effect with my accountant? Would they be annoyed that I'd not done this through them, or are they unable to do this for me?
No, I mean, your accountant will ordinarily claim capital allowances for items on an invoice. So your debt shares table, they will claim that. They wouldn't need my help. But the tax relief I claim is within the property. And if you remember our last podcast, we talked it needs to be valued. So a chartered valuer, which is need to generate this tax deduction, is different from a chartered accountant. Accountants like certainty, they like to be able to tick the invoice, say it's went there, and have audit trails. And a lot of accountants actually realise that they neither the time or the expertise to offer this specialist valuation advice. In fact, a lot of my work, about 90% of my work, actually comes from accountants.
Oh right, okay. So they like
the answer is no. It won't detrimentally affect the relationship. If it does, I'd be asking why.
Yeah, exactly. Okay, so the taxman. We all know that we need to pay our taxes, but we don't like the taxman to know about us. We like to keep under his radar and just do what we need to do. So if I start claiming capital allowances as a business, is that going to mean that the taxman's then going to start looking more closely at me and my business and what I do?
No, not necessarily. Firstly, as I mentioned a couple of questions ago, the Inland Revenue want you to claim this.
Okay.
They want you to claim it to put stimulus in the economy. But whilst HMRC will examine the claims, they actually will examine the document and look at it. They've got people who deal with valuation to certify that the claim is right. They will not all of a sudden go into a deeper investigation because you've claimed capital allowances. It's a bit like, imagine you would claim your personal allowance. So you're not going to forego claiming your personal allowance just in case the taxman or woman wants to investigate you. No, it's a tax relief that you're perfectly entitled to.
Oh yes, I should have said tax person, not taxman. Apologies. Okay, so then I wanted to ask about timescales. So, if I'm wanting to claim capital allowances, it's most probably because I'm looking for a little bit of a cash injection in my business. But obviously, if it's going to take 9 months, a year, it's not the route that I'm going to go down for a more kind of immediate. So how long does the whole process take on average from beginning to end?
The process is actually dependent on the information you get. Now, a lot of my job is to deal with information deficits. So, for example, if there's no drawings or I don't know the building, I might have to go and source them, I might have to find them. Once we get all the information, we have a rule of thumb it'll take 6 weeks to do the valuation.
Okay.
But a lot of it is independent, waiting in replies from prior owners, it could be, or waiting a builder giving you a breakdown of their detail, what they've done. So it's always information development. But if you get the information there, say for example you get a simple purchase, say somebody's buying a holiday let, right? A simple purchase, they've given the home report, they've given the purchase contract, the completion statement, all the details. Rule of thumb would be 6 weeks to turn that round into a valuation and tax deduction.
Perfect. Okay. And alongside that, how much information do I need to provide? Do I need to collate a lot of information? Do you do it for me? How long does that take, and what do I need to provide? It
depends on what you're doing. Now, we have a defined list of information. If it's an acquisition, it would typically be your replies from the solicitor about the history of the property, the commercial property standing inquiries. It would be the purchase contract, completion statement, evaluation report. Anything else would be asked. We just be able to clear up disclosure points. If you're doing a construction or a building project, in an ideal world, it would be contractor's final account. It would be the amount you paid for professional fees, a note of all these sort of things, floor plans as well, and then the rest of it again is disclosure points. A lot of the work we do, we just make information requests for once or twice. It's usually just clarifications that we're needing, But no, you won't be spending hours and hours getting information.
Okay.
If there's an information deficit, then I would use my skill to get around that. One example would be a builder. He'll give you the outline of the quote, but he's just refusing to give you any details. So I would use my knowledge to get round to help turn that into a value.
Okay, great. So I'm a business owner, but my business is making a loss. Why should I claim?
Well, the first thing I would ask is, are they making a taxable loss?
Okay.
A taxable loss.
What does that mean?
Well, it means that when you do a tax return, right, you have your profit before tax, and then there's items which you can add, which you have to add on, which you're not allowed to claim as an expense. Depreciation and entertainment might be one of them. So you might be doing lots and lots and lots of entertainment, which is disallowed, which actually means that your accounting loss is turned into a taxable profit, just as an example.
Okay.
Probably need to be doing a lot of entertainment, but that just shows you how it works. Now, capital allowances can in some instances increase the amount of taxable losses that can be utilised against your current income or your future incomes. And in addition, there could be tax credits claimed for things like land remediation relief in some instances as well. So regardless of whether you can use the allowances or not, it is important to remember that since 2012 there was a change in the rules, which meant if you could claim them, you must claim them. Doesn't mean you need to use them, you just have to have them in your tax return. So when you come to sell that property, you could have a property which the company's making taxable losses, you've not been able to utilise the allowances, but you get a whole pool of allowances sitting there of tax relief. So when you sell the building, it becomes much more valuable to the person buying it.
Okay. Okay. Interesting.
There's ways you can use it.
Okay. How much is this going to cost? Is this going to cost me a lot of money to sort of claim back?
Well, any allowances advised that you use should be able to demonstrate their worth. Before you sign the dotted line, they should be able to show you where the the cost fee benefit lies, and you should not. This should make you financially better off, or there's no point in doing the exercise. Typically, across the board, it tends to be based on a percentage of the qualifying items you identify, but each firm has their own different ways of doing things. What I would say is, when you do it, make sure you know where the fee you're paying sits with the amount of tax you're going to save. Always have that cost fee benefit analysis.
Okay.
That's what I would suggest. So no, it should demonstrate its worth. You should be financial. I mean, I can guarantee as a company owner and as a basic principle that I will make you financially better off by using this.
Okay.
If I can't, and there could be reasons for that. For example, you might have done this many years ago. The tax you're going to save would maybe take years and years to realise. It might not be worth your while. I'll just say I'm a chartered surveyor, so we've got to be completely upfront with the people we deal with. But always do that little check yourself to make sure that the cost is meeting the benefit. Okay.
Could you just give us a brief overview of what the claim process is and how it works?
Yeah, yes, no problem. So the process is, we would request some basic information. And with that, we will see, can you make a claim? Can you make a risk-free claim? If the answer to that is no, that's the end of the process. That's it. There wouldn't be a fee. Once we can establish that you're entitled to claim and there's no risk to you, we would then measure the property, we would do a survey of the property, we would use any documents we have, for example, cost documents, and put them into our calculations and prepare the valuation. And once we give you that valuation, you would give it to your accountant, who would use it in supporting your tax return, but your accountant will basically take 2 or 3 figures from that, put it in your tax return, and have the figures that we provide as a backup, a justification of those figures. So it gives that independent, robust valuation that goes with the tax return. And then if there's any questions that HMRC want to ask, like they might have, say you have furniture and fittings, right? And they just want a breakdown, can you tell me what's in that? Then any advisor would be there to answer and clarify that with them. Okay, perfect. So it's quite simple then. I've never made a claim before. Does this mean I've lost the chance to claim allowances on my other properties? No, you'll still be able to claim some form of relief. If the expenditure's been incurred more than 2 years, then you wouldn't get certain reliefs like land remediation relief, and you might lose out on annual investment allowance, which basically accelerates the tax benefit more quickly. However, it'll still be possible to claim retrospectively, provided that you still either own or lease the property, you've spent the money, and you're using it as a business asset. We do look at a lot of claims retrospectively, particularly during lockdown. In the first week of lockdown, I thought, we can't survey properties, what are we going to do?
Mm-hmm.
And then I was getting phone calls with, I've done this project in 2011.
Mm-hmm.
I've got a little bit of information, can you help me? I bought this office building in 2008. Can you help me? Bought this holiday let in 2003. Can you help me? So yes, you can go back and look into where you're selling the building. Actually, if I was buying a second-hand commercial property, or my client was, I'd be saying to them, find out what they've done about capital allowances.
Mm.
You need to get that in the mix. You need to know about it.
Mm-hmm.
So yeah, you can go back as long as you meet those conditions. You can go back, and that's an instance where it could generate a refund.
Okay.
It might be a case of you keep the allowances and move forward, but it could generate a refund in those instances.
So it's definitely worth doing. Okay, I owned a foreign controlled company. Can I still claim capital allowances for my property?
My goodness, you're going for it today, aren't you?
I've done my research.
Oh, the answer is yes. Foreign companies can claim deductions from the UK and rental income for properties that are owned in the UK, but they must be generated and paying some form of UK tax on it, subject to any double taxation agreements. But always keep your accountant look with that one.
Okay. So I think I've asked this already about how I get my refund from HMRC, but how does it actually work? So when you've established that there is capital allowances that I can claim back, how do I then actually get that refund or that money?
Right, if it's a situation where it could generate a refund, what would happen is you would give the report to your accountant, he would amend the relevant return, and he'd resubmit that to HMRC, tell them, we've paid too much tax here, and from there on in, the accountant would get that from HMRC for you.
Okay, perfect.
You just provide the means of getting it, which would be the valuation.
Okay, so you do still need to have and you work with the accountants, I assume. So if I came to you, I would then introduce you to my accountant.
Please do.
Yeah. Okay. Will claiming capital allowances affect my capital gains computation?
No, the two are mutually exclusive. A lot of reason why people don't claim capital allowances, believe it or not, is because they get capital allowances and capital gains mixed up.
Yeah, which I did initially when we were first speaking.
I wasn't going to mention that. But for plant machinery allowances, no, it won't impact whatsoever. With the new structures and buildings allowance, then the benefit you get will be added to the proceeds of a capital gains tax computation. But that's when you've built a building from scratch, or you've renovated it, or you've done a refurb or a fit out. So that new allowance, they have done it there, but no, it won't. Ordinary plant machinery allowances and desk, chairs, tables, carpet, electrical works, no, it will not impact your capital gains.
Amazing. And last question. I've had a property since 2010. Am I too late to claim capital allowances on it?
No, you're not. I sort of came back a couple of questions ago for that one, whereby you still own and lease it. If you still use it in your business, and excuse me a second, then yes, there's an opportunity to claim.
Perfect. Well, that was really, really interesting. Thank you. I'm sure that's cleared up a lot of questions that people have. However, if you do have any more questions, you can find Allan on thedirectorschoice.com and the accountancy area of the platform. Alternatively, if you want to go and look at his website directly, what's your website, Allan?
The website is www.cavettaconsulting.co.uk.
Perfect. And well, that was a great way to finish the year. Thank you so much. And I look forward to doing some more podcasts with you in the new year.
Yes, that'd be a pleasure. Thank you.
Thanks, Allan. Thank you. Bye.
All right.
Perfect.
Thank
Great.
you, that went well.
Good.
How did the first one get received?
Yeah, so I think if I'm honest, I can't keep up with whether when Sarah's posted them or not. But Sarah will have posted it across all social media platforms. She did. I'd have to check with Sarah on the analytics of it. I'll be honest, I've not asked her the question, but I can do for you. But what we're also doing is we are putting it out across mail shots as well.
Yeah.
So with regards to analytics for that, it's quite hard for us to see the click through because it's gone out. It's not just gone out on a social media platform. But I'll make sure she sends this one out across on a newsletter as well.
Yeah, that'd be good.
And what I was thinking was, so TDH, Jonathan's other business, they've got a database of around 17,000, and that's a mixture of, people who think they might need to liquidate or they've just responded to an ad. So it might be worth getting something out to them, because obviously the question about if I'm making a loss kind of claim, those guys, the reason business owners call them is normally because they're making a loss. So I'll have a chat with David, who heads up TDH, about getting a mail shot over to those guys as well about it.
We're in for a big sort of February. I'll tell you what's going on in February. We're relaunching our website.
Okay.
It's going to be quite exciting. It's going to have a calculator and do reports. So we're updating.
Oh, amazing! Yeah, that'd be really good.
All our case studies are getting redone. Everything is getting rebranded across the board as well.
Yeah. Well, let us know about that, because we can put that out there as well.
The one that might be interesting, I'm going to be doing on it. In February, I've got an interview, a sort of editorial with West Ender magazine in Glasgow, whereby we're focusing the holiday let. So people have submitted their return on the 31st, maybe missed out in claiming allowances. And that's who we're specifically trying to educate.
Okay.
Yeah.
Well, anything like that, obviously you're in the know. Just give me a nudge and we'll do something with you about it. Yeah,
that'd be ideal. And I can try and come up with some small education bites to help educate as well.
Yeah, marketing will get all of those sent out for you, 100%.
That's great. Thanks for the opportunity of doing this. I appreciate it.
No problem. It was great to have you on.
No problem. I'll see you later.
All right, Allan. Thanks very much. Bye.